Hey guys and girls, welcome to this week's episode of the No BS With Birchy podcast. I'm your host, Nathan Birch, and this is a show unraveling the truth to the facade of the 21st century. We're now exiting the matrix and waking up to motherfucking reality. Waking up to reality and, being stuck in the matrix are two separate things. And, today I want to talk about a controversial topic which is out there in the media at the moment, which is a very relevant one, which is, will the house prices drop by 50%? Right? It's a good question, good topic, good conversation to be having. And I just thought about this. I've got into the studio and, I haven't got any notes or that. I was just thinking about this and I was like, I'm going to make the first podcast for today on this topic because it's been out there in the news. It's on 60 Minutes at the moment. It's just the other day, it came out on 60 Minutes. There's a guy out there saying the property prices will most likely drop by 50%. And I know you guys that listen to this podcast, right, would be like, nah, I know what's bullshit, what's not. And, I know my way around the financial system. But there's a lot of people out there that still watch, mainstream media and they're plugged into the matrix that, don't know what's happening out there in the world. And, looking at these topics and these headlines and who are the people, when I heard about, the 60 Minutes article, I turned around and I said, Harry Dent, right? And we all laughed, right? They're like, how do you know? Did you watch it? And I'm like, no, I didn't see it, right? But this guy's been out there for 2 decades talking about fear and doom and gloom and, possible scenarios of an apocalypse happening out there. And for the most part, I don't actually disagree with the bloke. I don't disagree that there could be a financial catastrophe that could be of biblical proportions. And I heavily documented on a YouTube channel back in 2017 that this sort of stuff could possibly happen. But do I think it's going to happen? No. The hand's been shown. Is there truth to what these fellas are saying out there? And I'll use the word fellas because there's multiples of them. Over the last 20 years, I've seen this Harry Dent bloke. I've seen Kiyosaki come out talking about it. I've seen a guy called Stephen Keen back in 2012 or something, 2013, said if house prices don't drop by 50% or 40% this year, I'm going to walk to Canberra. This guy sold his house. He's a professor. Everyone trusts him and all that. And, he looked like an idiot, right? And then you've got people like, there's a guy called Martin North, and then there's John Adams. There's lots of these folks out there that talk about these incoming apocalypses to the finance industry and property is going to drop and all that. And I probably agree with maybe 30% to 50% of what they have to say, specifically around their data. Their data is really cool. So I don't disagree fundamentally with the fact that they should be or could be or whatever. But what's my thoughts on this and my take on it and the probability of it happening? We need to look at the whole system as a whole, right? And, these guys are saying back in the GFC, so for those of you that are young, you might not even know what the GFC is. It's the global financial crisis back in 2007, 2008, 2009, which in the US, there was like the subprime mortgages. So everyone thinks you just go to the bank and the bank's got this big vault of money and then they just give you some money and go, oh, here you go, here's $250,000, go get yourself a loan and have a good life and pay us some interest each month. It isn't how it happens, right? Now, these banks package up bonds and derivatives and then they sell them and, your money is like an IOU that gets created from the bank and, it's made out of thin air. It's just fugazi, right? You've all seen The Wolf of Wall Street. It's a big Ponzi scheme of money. So that's where I agree with these fellas. However, in 2009, the market blew apart and it was a mortgage crisis and, that caused an issue in the US. And if we look at Australia, Australia did have some impact to it because construction finance and, development stalled and stuff like that. But a lot of markets took off over that because we saw a crash that occurred naturally. And then suddenly they came back and backfilled it with cheap interest rates, first homeowner grants, stimulus packages for building, all these different things to stimulate the economy, just like we've just seen in 2020, which caused the mother of all booms in 2010, 11, 12, 13, 14, 15, 16. And then the market sort of subsided and then, the markets took off when Corona came. And, the part where I disagree with them and the potential of really happening, is we've got to look at what this system is really made up of, right? Who creates it? Who creates the money? What is an asset out there? People think their house is the asset, but no, your mortgage is an asset to a bank or to an institution or into a government or into a big conglomerate of faceless people that invest into your mortgages to give you those bonds that are being provided. So basically, your property is someone else's investment, and even if you don't have a mortgage on your property, it is still someone else's investment, because those properties, the financial debt instruments are being created off the back of that. So, looking at if the market was to drop by 50%, right, due to some sort of catastrophe that was to happen, that means that the banks that have lent money at an 80% mortgage, a 90% mortgage, a 95% mortgage, they would all get wiped out catastrophically in that sort of event. And we've seen this time and time again over the last 50 years. We've seen them just keep printing money. Every time it looks like a recession, they just print money and get through it. But what that does is it creates a bigger debt bubble. And I'm not saying there's not a bubble out there. The bubble is not concentrated around your property market. The property is just a vehicle on top of that. It's the whole financial industry and the financial system that is a Ponzi scheme. And I've talked about this for many, many years, which I do agree upon. But we've seen the whole world got locked into their houses. People's businesses were closed down. People's jobs were gone. We should have seen the epic crash of epic proportion. But why didn't we see that happen? They just printed money. They made interest rates 10 basis points, right? So 10% or 1% interest rates. Well, now it's like 435 in Australia. So it's really gone up from 10 to 435. So 4.35% or 0.1% it used to be. So this whole financial system is just made up of cheap, easy, accessible credit out there. And we're in a position where globally, there's recessions all around the globe. But what does that translate into? Does that translate that property prices are falling? We're seeing booms that are occurring in areas and properties rising in 2024. I just saw that one of my clients, they bought a property last year. I don't recommend on selling properties. I'm not here to say, hey, buy or sell. But one of my investors bought a property last year through my buyer's agents. We paid $400,000 for it. They just sold it for $630,000 today, right? They've had it for a year. Not even a year yet, and that's a 50% increase in the value of the property in a year. As interest rates have gone through the roof, right? There's still markets out there going up. So where does the rhetoric come in where the whole bubble's going to burst and implode? If it did, the financial instruments of the rulers and the policymakers and the real ones that are in control, not all us, peasants that are out there, all of us, it's the elite, the banking system, the controlling cartel that controls this financial system. They would be severely screwed if that was to occur. So it would be fun to see. I'd love to pick up assets for pennies in the dollar. I'd love to see my own assets drop by 50%. I've been through these markets for 2 decades, going into my 3rd decade of investing, right? I was talking about it before, and when I get a haircut nowadays, I see all the white hair fall on the gown that they put on you, right? Here's this old bloke that they're cutting their hair, get his hair away, and it's me, right? I've seen these markets happen throughout decades, right? 4 properties, 3 decades ago almost. So as this time goes on, the debt's relatively low. I'm happy to see markets fall. I'd love to see a market fall more than the next guy, right? However, the reality of that occurring, you've just seen their hand. Every time there's a crisis, they just print their way through. The GFC, Y2K bug. Y2K bug. A lot of people don't know what a Y2K bug is. It's. I'm going to ask from the cameraman here. Does the cameraman know what the Y2? No, right? People don't know what the Y2K bug is, right? I'm not going to go into Google it, right? But that September 11, GFC, APRA changes in Australia here, Corona, And here we are on the eve of the next big thing, right? And I said, going back in 2017, these next cycles that we see, we'll see boom and bust cycles that would normally take like a 7-year or an 8-year or a 10-year cycle, turn into a 1 or a 2-year cycle. They'll boom, bust, boom, bust, boom, bust. But the way that they have to get their way through is just to keep printing ridiculously cheap money. And that's what they've done. And I expect they'll continue to do that because debt becomes irrelevant with inflation. And the more debt that they print out there, the easier it is to pay out to the people that came earlier, just like any good Ponzi scheme, right? So I'm not disagreeing that the whole system is a Ponzi scheme. I'm not disagreeing that these people that talk about the 50% decreases aren't correct with their research. However, I don't see it happening, right? Because the ruling power moves are being done by people that control this whole system, right? It's all fake. That's the main part of it. Second part, I remember in 2016, a guy came out from the US, I forget his name, and I used to be in the media all the time, and we had a debate, and he made some comment on Twitter, like, who's this dickhead thinking he's saying this stuff, right? So this guy came out from the US and he said, the property price is going to fall by 40%. Why did they go? Like, the media doesn't come out. The media comes with two angles, right? One, they want to push an agenda, or two, someone wants to push a story or a book. So if I went to the media and go, hey, let's talk about this, they go, yeah, that's cool. And then it's like, hey, I've got a book to sell, or I've got this to sell, or I've got the next thing to sell. Or the media would come to me and say, hey, help us comment. I've got some media requests recently to talk about some political stuff. And I'm questioning, should I go into it and talk about it? Because it's never, I lower my intelligence by doing it, right? So I look at the media and I think, who are these people that are promoting and pushing this shit through the media, right? They've got a book to sell. My greatest book, right? The market's going to crash, or they're going to sell buy gold and silver, get out of property, whatever, right? The guy in 2016, we had a fight. He was like on the social media going off about me. I called him out for it, right? It was a hedge fund. He ran a hedge fund in the US and they were shorting the Australian bank stocks. So he came out on 60 Minutes, said the market's going to crash, right? And then tried to short the stocks in the banking industry so they make the money, right? So what's the agenda of the people giving the information, right? Yeah, they might have some knowledge. Yeah, they might have the data, but they don't look at the whole landscape. But I could be wrong on 20% of the stuff I say too, right? Not 100% perfect every day of the week. But the data is one thing, but then you've got to look at all the other vantage points of the system and the fundamentals of the system that are out there. So always question, when you're seeing anyone in the media, and I talk about this with the matrix and the system that we're in, is we need to be looking at, whether it's, I'm not talking about health advice. I never come here and say, hey, you should do this for health, right? There's other people that talk about that. I'm not here talking about marriage advice to you. I'm not talking about how to be the best athlete out there, right? I'm talking about finances and property. But when I see these people in the media, and I know that they're placed there, right? I question, why were they placed there? What is their agenda? What are they doing? And if I know that there's 95% of bullshit that's out there and the things that I know about, that's why I question the other 99% of things that I don't know out there in the industry, and question that as well. And I think everyone should be questioning and not obeying with blind faith, and come up with the answer that's logical, reasonable, and in line with your belief system and where you're heading in your life and your journey of being here. So I'm not going to go too deep on that. I just want to do a quick little podcast to talk about my thoughts on, are we going to see a 50% correction? No. There will be some markets getting corrected in the not too distant future. I'm going to make a second podcast of this and talk about property cycles, property markets, and what I see happening around Australia in 2024 through this first 2/3 of the year, and what I see happening in 24, 25 with some of the risks that I see out. So make sure that you listen into that podcast when I'm talking about market cycles and the property markets across Australia. We'll catch up soon. Thanks a lot for listening. Make sure you share, like, tag your friends and family, and subscribe. Google Play, Apple Play, Spotify, YouTube, every Thursday. See you next Thursday. Have a great week. Bye for now. If you need help as well, reach out to us, 1300 367 925, admin at B.Invested.com.au. Have a great day. Bye for now.
Like Bilal said, man, we stuck in the matrix. This my advice, don't care if you take it. The dollar back to die, soon to be hyperinflated.